everybody. I'm Peter Grant with Zaner Metals in Denver. You're watching This Week in Metals. Peter Thomas is here as he always is. What do you know?
I know that it's been just like we called it last week, another wild day and an interesting, like last 90-second rally in the metals. I mean, it was quite a day.
Yeah, you're talking about Friday's action. Decent,
Yeah,
decent closes.
yeah. End
Let's
of the week, right?
yeah, let's jump right into gold then. So
Sure.
gold, despite Friday's rally, ended up the week down 0.6%. It was the first lower weekly close in three. And again, I was kind of impressed with the rally on Friday. I had written in my midweek report that
Right.
if we saw a sell-off on Friday, it would reflect a lack of conviction on the part of the longs, and that would have been troubling. But we didn't see that. And while I wouldn't say gold is necessarily out of the woods yet, by
Right.
any stretch of the imagination, again, much like the last 2-3 weeks, I am less than impressed with momentum, and
Well, there hasn't been any.
yeah, a little bit worried about the uh, potential bear flag that's particularly evident on the weekly chart. So basically right now gold is sort of tracking the 20-day moving average.
Well,
And
from a technical standpoint, it looks lethargic like it did last week. But I think you and I have been talking about this for months and months and months. Asia, I got the numbers out of India this morning for end of week, and real surprising. I was very happy to see him, and we were calling for higher numbers, weren't we, Pete? When we were looking at him, we got 56,472 ounces going in, and the premium, which is always a really strong indicator, guys, if we see a higher premium, in other words, what the customer is willing to pay at the counter, very, very indicative of a strong market. And it went up another dollar.
yeah,
So I was pleased to see that. I think that even though the charts are going, hey, we're going lower, we're seeing global consumption getting better. And I just thought that was interesting because normally that premium could be as much as $10 lower. So that's really a $16 rally on the physical side. I don't think it's
yeah,
that bad yet.
you got to be impressed,
Yeah,
and the uh, not to sound like a broken record because I feel like I've been saying the same thing for a couple of weeks now, but
yeah,
it's worth pointing out, particularly for our new viewers,
right.
is that through Thursday last week, I think we're at 28 consecutive days of ETF outflows.
Yes, it's been a very long and strong, but it's interesting that at what point does that stop? I mean, the question becomes, how many people are going to continue to take out of their ETF? I don't know. Stock market keeps rolling like this. We're going to see people pouring in the stocks, and the first break we see is just going to be a panic to get back into them.
Yeah. Another bright spot I thought is that, gold held up pretty well given the fact that yields remain elevated and the dollar seems to finally be taking some notice of those higher yields. And we saw a
Yeah.
4-month high in the dollar index last week. And yet gold didn't really sort of shrug that off, which I think is encouraging. So there's a bit of a push and a pull going on. We're seeing
Right.
heightened
Yeah. Yeah.
cases
Yeah.
of COVID in Europe in particular. Some
6,000 cases in London shocked the heck out of them this week. They were talking about how they're going to do it, and Larry Kudlow came out today and said, "We don't understand how Europe can screw this up anymore. I mean, it's real simple. You get a center and you give a person a shot." And he goes, "I don't. We can't figure out what's going on over there." So I agree with you 100%. And even the newscasters are coming out going, what's going on over there? Because this is not that complicated.
Yeah, we're seeing a bit of a rotation higher in cases in Colorado recently as well. And maybe it's just a blip in the data, and
Yeah.
but Europe is a concern, and so that is obviously uh, so when you start thinking about demand destruction again, much like we saw last year when COVID first raised its ugly head,
Yeah.
we they put some pressure on a lot of the commodities and so forth, because of demand destruction fears, and so that's surfaced a little bit, I think, and perhaps rightfully so. We'll have to see how things play out in Europe, and hopefully, knock on wood, that again, this is just a blip in the data too, but it seems to
Yeah,
be a little bit more.
I hope you're right. I mean, but we're seeing hundreds of thousands of people now flooding across the American border without getting COVID tests, of which they're saying 10 to 12% have COVID, and out of that, possibly 2% of them have the super bug from Brazil, which means that we could have a whole new thing going on. So I agree with you. Let's just hope it's a blip. Let's hope everybody gets their shot, and that the Brazilian bug is not resistant to the inoculation.
So I think that there's not to revel in other people's misery, certainly, but
Yeah,
COVID was a huge driver of gold last year. In fact, drove it to new all-time highs.
really was.
If it makes a resurgence, a significant resurgence, whether it's isolated to Europe or you know more global in nature, certainly there's going to be more safe haven demand for gold. Alternatively,
Hmm.
if this is just a blip in the data and we
Right.
kind of get back into recovery mode, and more stimulus and so forth, I think that bodes well, not just for gold because of inflation concerns and so
Right.
forth, but all of the industrial commodities, such as silver, platinum, palladium, copper. The list goes on and on.
All
And
the things that we hedge on the Tornado Bullion platform.
yeah, yeah,
Absolutely.
and
Yeah.
and and other things as well, energy and
Oh, yeah.
lumber and concrete and
Well,
so
lumber's
forth.
just been insane. I mean, there's an old saying, trade lumber gets splinters, and it's true.
Right.
Yeah.
I
But
remember that
I
old
mean,
adage.
let's take a look here at silver, because we held $25, right? And 25, 30, 25, 40s, pretty much everybody's magic number right now who's a technician. 25, 30 really is the number. And I've been watching the ETFs to see if they're like going into this panic mode that we've been seeing in gold. And the volume in there, they traded 42 million shares today. I'm like, if I was a gorilla, I wouldn't be worried. I mean, these guys can just keep right on a buying, because every time it goes under 25, somebody's buying it, and the trade has just been insane in there. So silver staying is a very popular commodity to sell.
Yeah, so in fact, silver closed down a little bit over 4% last week. It was the
Yeah.
first lower weekly close in three. I did have it setting a spot, anyways, set a 9-week low at 24.40 on
Okay.
Thursday last week, but it quickly
Yeah, but
came
that
back.
rally was something, wasn't it?
Yeah, it rallied
Yeah.
like a beast.
Yeah.
It traded last week. It traded below the 100-day moving average, which is a
Which it,
concern.
yeah.
It traded briefly below the 200-day on
Well,
Thursday,
I
but
can see
again,
that.
it rallied back.
Yeah.
So I have a little bit more concern about silver, and I think this again speaks to worries about COVID and European
Well,
demand destruction.
if I was a technician and I saw it ripped through those two really critical points, I mean, it's just flushed all the stops. All the week longs are gone. And this rally, this monster rally it just had, I mean, it might have legs at that point, because there's no stops underneath to feed on. So the alternative would be the sell stops, or the buy stops for the shorts above this market. This could be real interesting. I didn't realize that
Yeah,
we'd taken them both out.
yeah. So I'd feel a lot better if we traded back above $26, and 27 is still sort of my number to
Okay,
to return confidence to the underlying uptrend. I think the
gotcha.
big I was going to say the gorilla in the room, but let's call it the silverback in the room. The big silverback in the room is still President Biden's $3 trillion infrastructure plan.
Yeah,
And the way he
the
described it,
tax Trojan horse. Yeah.
yeah, the way he
Hmm.
described it was a physical and technological stimulus plan, or
Hmm.
referencing physical and technological infrastructure. So again, that speaks to broadband and 5G and um, other
Lots of silver
technologies.
and 5G, baby.
Yeah, baby, you got it.
Mm-hmm.
So yeah, and so they seem to have settled on 3 trillion as their number.
Yeah, I know.
That's the one getting bandied about the most, anyways. But
Yeah, we're
I
supposed
still
to
hear the
know in
four
through.
trillion
We're
dollar
going to talk about it
whispers.
in Pittsburgh or something next week, or
Uh,
I heard. Yeah. Anyway, he's supposed to talk about it very shortly, so we'll see what the number is that they've dreamed up.
yeah, 3 trillion, 4 trillion. Here's the bottom line.
Hey.
The national debt's at about $28 trillion right now. With the $1.9 trillion stimulus that's already out there,
Yeah.
and checks going out and so forth, and spending going on, we're on the fast track to 30.
Yeah.
Three trillion in infrastructure spending is gonna, because the only way they're gonna finance this, Pete, is with more treasuries. And who's the
Well,
buyer of treasuries
I mean,
right
they're
now?
already talking a 50% tax level, which is, between state and federal. And so every dollar you make, half of it's going to go to the government to pay the interest on what they're doing. I mean,
Right. In inflation.
yeah,
So again, inflation
doesn't
expectations
exist.
have been. You're right. It doesn't, at least in the Fed's mind.
Yes.
The PCE chain price index came out last week, and was only up 0.2%
Tell our
um,
people what that is so that,
in
the
February.
acronyms don't scare them.
The uh, personal consumption expenditure chain price index is the measure of inflation that the Fed uses, and
Yes.
that's the one that they're trying to get to 2% or better. So
Yeah.
right now, PCE is at 1.6% year over
So,
year.
so we're getting very close.
Take out food and energy, Pete, and it's only 1.4%. Because as you
Yeah, which is
know,
what they did,
because
and,
as food prices, are going down.
oh yeah,
And so is
yeah.
your gas price.
Get
Wait a
let's see,
minute.
gas is up 30%, crude oil's up 50%, food prices are up anywhere from 25 to 30%. So, but if you take them out of that number, everything's fine.
Well, even
Yeah.
even with them in 1.6, that doesn't strike me as reality. Because I've got a family and I have to feed them and I have to constantly drive them around.
Oh, yeah. Oh, I
And it's
remember. I have
costing a
lots of kids.
boatload.
I know that soccer practice, hockey practice,
Good
judo practice. Oh,
golly.
believe me, man, I got the scars too. All right.
Yeah, yeah.
But let's take a quick peek here. Platinum, palladium. Uh, we China is projecting, and this is important. Now, remember last week I promised y'all that I would wade through the Communist Party manifesto and going into the next 5 years, and it was gigantic. So I got some pieces which I think are important. Chinese program is going to quote encourage the buying of light trucks, which means they're going to allow people to do it because they put quotas on everything because that's how communism is, and they're going to allow trucks of 3.5 tons or less to be under a loosened restriction, and a vehicle of under 2.5 uh, pounds, that's about another 2.5 ton, to fall under that also. And they're talking about consumption of as much an increase of 25% of vehicles year on year. So you tell me where all those catalytic converters are going to come from, because I don't think there's that much platinum palladium around.
Right. Yeah.
Yeah,
Recyclers geared up.
man, God bless our recyclers.
Yeah.
Without them, we'd be lost.
So platinum closed down 1.3% last week. It was the second consecutive lower weekly close. Although it, like silver, rallied pretty smartly on Friday. In fact,
Yes,
it was three and a half
absolutely.
percent off the weekly low at 1140 by the time it closed on Friday. So that, I mean, you look at the chart, and it's very clear that it's still in an uptrend, even though
Yeah,
we're corrective consolidative
yeah.
for the
I mean,
time being.
it turned around on a dime. Remember, if you remember our last rally in there was $140. I just was like, what? If
Mhm.
you know,
Yeah.
and the minute people see that thing start to turn green and go, I mean, they are on it, and it's just a bullet, and it didn't change. I mean, we
Yeah.
got this rally and it was just off to the races.
Palladium remains pretty well supported. It closed up 1.5%
I
last
concur.
week,
Yeah.
fourth consecutive higher weekly close.
Yep.
Still, it's consolidating the previous week's gains. Remember, we had a huge gain 2 weeks
Huge gain.
ago,
Yeah. Yeah.
and we're still trading at the high end of that range.
Well, I mean, you want to spin the wheel. Everybody's looking for $3,000 in there, and
Yeah,
it doesn't look that far away to me.
yeah. So the high of the move so far is 27.55 and a half
Okay.
from last or 2 weeks
Last
ago.
2 weeks ago.
And
Yeah.
then if we break through that, then the all-time high is 28.75 and a half, which is just a stone's throw away, right? And then
That
that big
far?
round number, well, you know how the markets love those big round
The
numbers.
markets really do like round numbers. Yep,
Yep.
absolutely. Matter of fact, we should get our Palladium 3,000 hats, right?
Right. That's the kiss of death.
The fastest way to kill a market is for an old pro like me to come out and go, it's going there for sure, and it's just gonna falls right off the cliff.
XPD 3000.
Yeah, right.
Yeah, don't
But
do it, Pete.
no, I won't. I promise
Unless you
you, I
give me time
won't.
to short. Then
All right, look
then
at
maybe.
here. Yeah, absolutely. I'll call you. I'll say, hey, time to sell the bejesus out of this thing. Hey, what do you think of copper, my friend?
I think similar. I think copper is still good. We're
Yep.
off the highs. Closed down 0.6% last week.
Yeah, they hit
Second
it hard last week.
consecutive lower weekly close. But
Yeah.
again, good price action on Friday leaves me encouraged. And again, you look at the chart, and it's very clear that copper is still in an uptrend. And if you believe there's going to be $3 trillion in infrastructure spending, you better believe that copper is going to do fine and go higher.
10% of the solvents and recycle in the wire going to China is not going through because a boat is stuck in the
Right.
in the Panama Canal, right? And so
The Suez Canal.
Suez Canal, excuse me, thank you very much. Yeah, I was thinking Suez. I've actually stood there and looked at it. But here's the thing. I look at it and I go, okay, we were energy independent. We're not anymore because we're not pumping off of federal land and we're not allowing new well. So we're going to lose our energy independence. So that means that the oil that comes through the straits, we won't be getting. And then when we have a freeze or bad weather, we don't get electricity. People freeze to death because they don't have any heat. So it kind of makes you look at the Green Deal from a different angle, kind of like, if we have bad weather or we have logistics problems, which we're having both of, then what are you going to do? I mean, it's a real difficult question. And here's something to think about. 75% of all copper in the world is twisted into strand wire and used for electrical passage. China now has electricity in every home in China. And that means that they can buy computers, they can buy washer dryers, they can expand into things that they didn't have before they had electricity. So we're looking at an amazing revolution going on in which 61 to 63% of all the copper in the world is going to end up in China. So if we have a $3 trillion buy-in, and which we're going to need massive amounts of copper, where is it going to come from? This is going to be very interesting. And as you know from basic economics 101, if you can't find it and you raise the price, all of a sudden you find it, right? I mean,
That's true.
raise the price and it comes crawling out. So on top of that, here's one of the most brilliant things I've ever seen. Volkswagen, which destroyed the diesel infrastructure for automobiles in Europe completely, now said we're going electric completely. Every one of our vehicles is going to be electric by 2025. I think that was the kickoff date. And oh, by the way, I'm looking at it and I'm going, where did you contract all the copper? Because you're going from 40 pounds of copper in a vehicle to 110 pounds of copper in a vehicle. Where's it going to come from? They haven't bought a pound. They haven't entered into the market at all. So you have Volkswagen and China both stepping in at the same time. It's going to be very. If I was a Chilean, I'd be very happy right now.
Yeah, our longer term, well, not even really all that longer term anymore. $5
Yeah,
is a fairly reasonable objective for
I think you're
copper.
right.
But
Yeah,
if we see all of this competition for the limited amount of copper that there is in the world, certainly recycling and so forth will pick up.
oh,
If prices continue to move higher, but if
absolutely.
supply remains tight and more people are bidding for that copper,
She's going up, baby.
it's going up.
Only thing that's going to hurt our scrappers is the accentuated price of diesel. If they still make it illegal to pump out of federal sites, which we desperately need to make, distillates, the price is going to go up, and it's going to kill our scrappers as far as moving product, because they'll spend $1 million a month in diesel just to get stuff to the refinery, which in effect will really hurt the infrastructure rebuild. So I think they need to maybe dial that back a little bit and allow more crude to come off of these sites that they want to close down, because it's really going to hurt us.
Yeah, don't pull the plug on the existing technology when the new technology is not quite up to
Doesn't
speed
work.
yet.
Yeah, right. Yeah,
Just a suggestion, fellas.
all the time causing trouble, huh?
Yeah, exactly. All right, my
All
friend.
right. Hey,
We
listen,
covered
it's
all our
been fun.
bases.
Yeah, I
Hey,
think we
give
covered.
us
I
a
think we got them all.
yeah, give us a like or a follow. And if you
Yeah,
are inclined to prefer to read your precious metals market analysis, you can subscribe to Grant on Gold at
please do.
grantongold.com.
And that comes out midweek, which is nice, because if you miss what was going on Monday, Tuesday, Wednesday, you've been busy that week or doing something, you get a chance to catch up. It's a real
There's
good
no
feeling.
real logic behind that other than the fact that the beginning of my week is always so busy. So
Well, well, usually everybody
when
comes out of the box shooting on a Monday anyway, and to get people caught up, it's a good idea. And
yeah.
then to get a wrap up from us at the end helps a lot too. So if you want to keep yourselves informed, follow us, follow the Grant on Gold, and it's been a great week. Thanks for dropping by and give us a like.
I'm Peter Grant with Zaner Metals in Denver. Have a great week.